Hi, this is Sankar Sharma. In this video, we're going to talk about the possible energy sources that all artificial intelligence related companies are rushing to get to. That is nuclear energy. So we're going to talk about which nuclear energy stocks and ETFs look good and what's happening in AI and alternate energy sources, i.e. nuclear energy. Watch till the end because you don't want to miss anything. Hi, welcome back. So we are going to look at alternate energy source, which is nuclear energy. So we're going to look at different companies that produce uranium, right? Why is that important? Last week, there's a big jump in uranium stocks because all the major companies like Alphabet, Meta, Amazon, Nvidia, Microsoft, all of them are trying to secure alternate energy sources for the future because A, it's got to be the best energy source. B, it's got to be sustainable. C, it has to be a green energy. So that means there is a rush to secure atomic energy, nuclear energy. And what is common in the nuclear energy is the uranium, right? Uranium and uranium cells, etc., fuel cells. A lot of companies have made a big move in the last 1 month. So let's go and analyze each one and see which one looks sound and better. And then also, I'm going to discuss 5 uranium stocks and 2 uranium ETFs for you to keep on your radar. 5 uranium stocks, 2 ETFs, exchange traded funds to keep on your radar. We're going to dissect their financials. We're going to look at their strength of earnings. And also, we're going to look at the charts to see where the possible future targets exist. Let's go and do that one at a time. First of all, let me give you the 5 uranium stocks. These are UUU, OKLO, CCJ, UEC, and then 2 ETFs, URNM and URA. So we're going to start from the exchange traded funds and then go forward and discuss about all the charts. Then we're going to look at seasonality to see if seasonality affects any of these uranium stocks and see if you can take advantage of seasonality as well. Because as I remember, August, October generally are a good month for uranium stocks and see if still is the case. That used to be the case in the past. We're going to go and check that, validate each idea. See, if you want to make money in the markets, you should validate the idea. This is where many investors, traders fail. There's no point in you just taking an idea and going to the execution. You have to validate. So that's what we're going to do in the next few minutes. And make yourself comfortable. Let's go take a deep dive. This is not a buy or sell recommendation or a hold recommendation. This is just to simplify your analysis, show you where the opportunities exist, and also try to show you how to validate these ideas. And thank you for confirming, and some of you confirmed that you would like to receive more trading and investing education as well, which I'll try to incorporate as time progresses. And one key aspect, if you want to do trade or invest successfully, is to remember the 3-step process. First, idea, then validate the idea and execute the idea. 3 simple steps. Hopefully that will sink in as we go along, and then I'll give you more strategies, tools, and all that good stuff as time progresses. And if you haven't participated in the survey, please do act on the poll so that I know exactly what you want, so I can give you the content that matters to you. So let's jump in and discuss everything in greater detail. First, I'm going to start with URA. So here is URA. This is Global X Uranium ETF. This is listed on New York Stock Exchange. Now, I want you to look at this. This is Mare Asset Global Investment Company Limited is the issuer of this. And this is not a actively managed ETF. Normally, there are two types of exchange traded funds, actively managed and passively managed. Actively managed generally will have more charges because the fund manager will be actively buying and selling assets inside that ETF. ETF is nothing but exchange traded fund. Exchange traded fund is nothing but it's a fund where you can take a bunch of stocks and put them together and make a fund. So that is in simplest form a fund means. So anybody can make a fund. You can make, pick 10 uranium stocks. You can call it your own uranium ETF fund. So just to give you some insights into it. So if nobody actively managing, they just buy and hold forever. That is called passive. If you're buying and selling actively, then that becomes actively managed fund. Actively managed funds will charge you a little bit more. So with that little background, I'm assuming some of you may be aware of it, some of you may not be aware of it. So I want to bring everybody up to speed, and then we can move forward. Now, what is interesting here is it's a nuclear energy stock for sure. And this is what I want you to focus on. Look at the performance of this ETF. Smashing, I would say. Look, 5 years is 200%, 3 years is 27, 1 year. So is actually the momentum is picking up as we speak right now. So it looks like to me it's a really early stage of takeoff. So that is a good sign first right off the bat, that is a good sign. Now this gives you a breakdown. See, if you want to invest in an ETF, you should always look under the bonnet. How do you look at under the bonnet? You look inside what is in that fund or in that exchange traded fund and how the assets are divided. If you see, they're not holding much in cash, but most of it is invested, and 67.74% is in non-energy minerals. That is worth noting. It's in non-energy minerals. Okay. And the breakdown by region, you can see North America, they got the highest position, followed by Asia and Oceania, and everything else follows after that. They don't have anything in the Middle East or Latin America. So that means the geopolitical tensions won't affect this ETF that much unless there is, something happens in the Asia. This is okay. So that is kind of a risk management. You got to think these days globally and see if there's anything that could make or break this particular ETF. So far that looks good. Now let's go back, and this is a good sign on the returns. Now I want to look at seasonals for this ETF. So I'm going to take you to seasonality chart. This one is called URA, the ticker symbol. So we're going to go and look at URA. Okay. So you see URA generally goes up in November, right? Seasonality last 5 years says generally goes up in November. Okay, that's good sign. That's good to know. And let's come back. And I'm going to mark that in green because that looks interesting to me. Okay, so you can right click and you can mark if you're interested in something. That's how you organize your watch list. So what I've got here is uranium stocks watch list, uranium stocks and ETFs watch list. So in this watch list, I've got a list of stocks. How do you create a watch list? You go here and you can add the symbols by going in here. If you want to create a watch list, you go and create a list by clicking create list. And once you create a new list, say for example, I want to say new list, I call it uranium. I'll call it 5 uranium stocks and 2 uranium ETFs. When you create a watch list like this, when things move, you can quickly jump in and take the trades without wasting too much time. Now, if I want to add stocks, I click that plus sign right there in the trading view, and I'd say, okay, I want So I want to add these stocks. So I'll do U. I'll go and click that plus sign. It adds that to the list. The next one I'll do is UROY. Add that to the list. Next one is Oklo. I add that to the list. And then I see CCJ. I add that to the list. And then I got UUC, which is another stock. I add that to the list. Now I got two exchange traded funds. URNM. I add that, and then I can add URA. Okay. So I got a list of stocks and two ETFs. So this is amazing. Now you got organized. In future, if you see an opportunity, if you see suddenly a bunch of uranium stocks start to go up before market opens, or immediately after market opens, you can come here, your watch list, and take these stocks one by one quickly. That means you'll be able to make money and amplify your returns very quickly. So that is a little bit of how you organize it with a particular idea. So in this case, we are looking at nuclear energy and uranium stocks because artificial intelligence needs a lot of power. It also needs a lot of cooling as well. And this power, as I said, you need those three criteria, which is like it's got to be green energy, it's got to be sustainable, and all that good stuff. Because if it's electricity, whatever has happened in Cuba, with lights out, we can't have that kind of crisis if you're dealing with AI related chips, servers, or hardware, software. It's really essential to have sustainable energy. This is where nuclear energy comes and plays a big part. So let's get back and watch one another item. I want to draw your attention to dividend yield. Dividend yield is 5.1%. And when you are looking at an exchange traded fund, you look at two things. You look at assets under management, that is quite a lot, 3.84, that's good. And fund flows. So fund flows per year is about 1.13 billion, and they're giving 5.10 interest. And this we'll talk about it another time. But for now, you know that this looks very interesting, and we can add that to our list. Now let's quickly jump on the chart and see what URA chart tells us. So if you look at the URA chart, right off the bat, this is a weekly chart. You can see it's weekly. You can pick the times from here. You can see it's a weekly chart. Now, right off the bat, I'm very impressed with this because there is something called price patterns. So if I take a little highlighter and show you, see there is what is called W pattern, right? W pattern is a winning pattern because normally that W pattern tells you that this stock is no longer going to, this ETF no longer going to go down. It's got potential to go a lot higher. That is excellent news. Now, let's start taking this and analyze it further. Now, if you look at long-term basis, right? Let me just get rid of this. So let me just go into long-term basis and see where this particular stock is coming from, right? And if you see, this stock has come down from dizzy heights. Ooh, look at the price. It came from $134 all the way now. Currently, it is at 34, and it went as low as $7, right? That is interesting. So if you got it here, well done. But if you haven't got it at this point, it's not late. Because now what we need to see, assuming that you decide to hold this for 5 years or 3 years, whatever is your holding period, a few months, few days, depending on whether you're investor or trader. So you can see if it breaks above this level, it has potential to go a lot higher. Okay? Potential to go a lot higher. In the long run, if you see it came from a very dizzy heights, and 2011, and it's now really at a throwaway price, in my opinion. So that is interesting to know. Always look on the left-hand side of the chart before you make any decisions. So now if I zoom in, this chart is what is called a candlestick chart, as you know. Now, this is trending very nicely. Trending nicely, right? As long as it stays above this trend zone, this we call it trend zone. We should never call it as trend line, big mistake, because we always have support zones, resistance zones, because they're a cluster of points, and you should always call them zone. Some people naively call them as lines. It's not lines, zone, because that zone, see, every time price comes to that, bounces off. Price comes to that, bounces off. So it's very useful zone to know about it. So now, as long as we stay above, and if it comes down to anywhere here next time, so if it comes here anywhere and joins around 31.50, it's a good point, good place to get into this stock, as long as it doesn't break below. Or if it breaks out and comes back and tests at 33.75, that is also a good place to enter into this ETF. So overall, this ETF looks bullish in the long run. You saw the returns, so it's not bad if you hold it for for a few years, because you're getting it really at a discounted price compared to previous highs. So URA analysis finishes there. Now let's jump into the next one in the list, which is URNM. URNM is Sprott Uranium Miners ETF. Now, the funds is a lot less than what we saw in URA, and that is important thing to know. And also assets, if you look at the assets in here, is 3.84, whereas in URNM it's a little bit less. So that's worth noting. Now, if you go further down, so this offers access to global companies involved in mining, exploration, and development, production of uranium, as well as companies that hold physical uranium and uranium royalties. So that's an interesting combination, very different to the last one, which was holding minerals, etc. Again, if you see, that returns is not something you can sniff at. You can see last month, the return has jumped big time, you see, compared to previous. Now let's see how this fund has been divided. It's got non-energy minerals, like you saw in the last one, distribution services, it's got mutual fund and no cash, which is okay. Now, if you go further, you can see again, this doesn't have anything Africa, Middle East, Latin America. Asia allocation is less. This is an interesting combination because this company has got more on the European side. So that is interesting one to break down and see. And then, as we saw before with the other ETF, URNM is also on New York Stock Exchange. And let's go look at URNM seasonality. Again, if you look at URNM seasonality, what does it say? This ETF, it says in the last 5 years gone up in November. That is good to know. See, seasonality is not etched on stone. It just adds probability to your trading or investing. So that is good to know. Both the ETFs are generally up in November. Is it guaranteed? No. The past is no guarantee of future. Again, everything we are discussing here is not buy, sell, or hold recommendation. It is for you to help you do your analysis much better, so you don't do wrong investments, wrong trades, etc. So next, we have done those two. Now, URNM, let's go check the chart, because we were at the financials, and dividend yield again is 3.31 with this, and the last one is 5.1. So at this point in time, URA is looking better than URNM, as you can see comparison wise, and fund flows wise, assets under management wise. Combining all that, you can see URA ETF is slightly better than this ETF called URNM, which is spot uranium miners. So this one, Global X Uranium, looks slightly better at the moment. Okay, now that concludes the comparison of those two ETFs, exchange traded funds, URNM and URA. And so far, based on seasonality, both of them are going up in November, which is good. And they both performed well over a period, which is good. And URA is giving slightly higher yield, dividend yield, and URNM is giving low dividend yield. The URA dividend yield is above current bank rate, which is interesting. So instead of putting it in a savings account, you may put that money to work in URA. You get dividend as well as money grows. See, that's how you make your money work for you. Hopefully that's interesting. Now what we want to do next piece is we want to look at the 5 uranium stocks quickly. Let's jump in and go through each one. First one I got here is UEC. So UEC, I want to look at the chart, the technicals first. So I'm going to type in UEC and look at it. Uranium Energy Corporation. Let's look at the financials. First of all, before we go there, if you look at the returns, very good. Okay. It's been consistently making money. And so if you get stuck in this, it's okay. It's not bad. It made some decent amount of money. So currently it is negative earnings per share. That is a bit of a red line, but we'll check further. It's not making profit yet. Something to watch out for. And this belongs to Adani Group of Industries. Adani, if you don't know, is a big big industrial organization out from India. So this engages in the provision of uranium, titanium mining related activities. Interesting. Now, if you look at the numbers, if you look at the revenue, net income, net margins are down currently. So that's a bit of a concern. And let's go further up and look at financials. It's got a market capitalization of 3.48 billion, but currently it's in negative and it's founded in 2003. So valuation is increasing, but this is a big concern to me, the net income and net margin. So okay, these are all estimates. So no dividends for the stock. Now let's go look at the earnings and revenue because that's where we had issues. So if you look at earnings, quarter four earning is also expected to be negative. But if this company turns positive, a lot of investors will jump on this. And that is a possibility. Currently, it is showing negative estimate. But if it beats the earnings estimate in a positive way, this stock should raise to higher levels. But let's look at the revenue. 2023 revenue is looking a little bit better than 2022. It has a lot of uranium inventories that it's been accumulating, which is interesting. So we'll have to see what it does. What is interesting is in the United States, if you look at that, that has increased. That revenue has increased from United States. So that's good. Now let's look at the USC stock chart. If you look at the USC chart, it's been going up very, very well. So let's look at the weekly one. What you see again, you see nice W just like you saw in the uranium ETFs. That means this got potential to go a lot higher. It recently broke recent highs. Now, if you look at historically, it is at the all-time high. So one or two things to notice. When it gets to 926, which is not too far from here, all these people who bought it in 2007, they'll start selling heavily. So when it gets to 931, you should expect this particular stock to sell off very heavily, and then it might pick up. So if you want to get into this stock, it may be a good idea to wait for the sell-off to finish because it's not too far. The reward is too less compared to the risk. So reward to risk ratio wise, this is not too attractive at this point in time. Okay. Now let's jump into CCJ next. First, I'm going to go into CCJ and look at the stock. CCJ, I meant to do that. I'm going to do this one. So CCJ, if you look at CCJ, again, it had good return on investment and earnings estimate is positive. Market capitalization is high. Dividend is very less, almost insignificant, but it's revenue positive. Non-energy minerals and engages in provision of uranium, operates through uranium and fuel service segments, exploration, mining, milling, purchase, sale of uranium concentrate. That's interesting. But if you look at the financials, this one looks much better, looks much better than what we looked at last. So this one is much better than the UUC we looked at just a few minutes back, because this has got net margin positive, revenue positive, income positive. This looks much better than the UUC we looked at earlier. And let's go look at the revenue figures, the financial section. You're going to look at the earnings. So earnings is positive. It's not beat its own earnings from the past, but it's positive. So that is bit consolation. And you can see in terms of what it is doing with uranium, Cameco Corporation looks to be good. Okay. So it's got Canada, which is its primary country. Looks like most of its stuff is happening in Canada, then and US. So that is good, Canadian mining company. So overall, that kind of looks good. Let's look at the statements. If you look at the operating income growth is positive. So between UUC and CCJ, CCJ looks much better. Okay. Yeah, CCJ looks much better. That is good. Now let's move to the next one in the list, OKLO. ALTCAC. So if you look at this, again, it gave good returns, but interesting thing is EPS is negative, net income is negative. It hasn't been making money yet. It engages in development of fission reactors, provides clean energy through the design deployment of fast fission power plants. It's just a very young company, 2013. But what is interesting is how much the price has moved in the last 1 month and the last week. This is important to note. So even though this company, because it's a young company, is not showing big profits and revenues, but it looks like there is a lot of attention being paid to this particular company from from the investors and traders. So it's worth noting that. If you look at financials, if you go and look at the earnings, it went from EPS negative. Slowly it's turning around. If this turns positive, there'll be a lot of interest. People will trip over to jump on this particular stock. Maybe that is why it's suddenly going higher as we see this stock. Now let's look at the chart for this. Look at the chart. Whew. Within 1 month, it skyrocketed. If you go look at it on a bigger scale, you can see it's hit all-time high very recently, and you can read up the news, etc. on that. But this looks like it had a big move recent days. And this tells me it has potential to easily go to double. It has potential to double if it makes positive earnings. It has a target of $36 in the coming years. So OKLO looks good as well. OKLO looks good. Now let's also look at UROY. I think I missed that one. Let's look at UROY. Uranium Realty Corp. If you look at the financials, let's look at the earnings. Yeah, earnings is negative. It could turn around. It's not down too much. Revenues exceeded in 2023. It's got both uranium inventory and royalties. That is interesting. It's primarily in Canada. Canadian companies revenue, uranium royalty revenue for last year amounted to 13.9 in US dollars. Now, if you look at the earnings, yeah, earnings could turn around. Forecast is just about positive. Let's go back to overview and see how it performed. Yeah, again, this one went quite a bit high, not as high as OKLO, but that looks interesting on its own. So if you go check the stock chart, you can see it came from a lot higher level down to here again. You see a W pattern. So this W pattern is all telling that there is going to be a good amount of growth in these stocks. The nearest resistance is 3.79. It may go there fast. Once it crosses that, it could go a lot higher to 4.94 as your future target. So any pullback should be considered as a buying opportunity in this particular stock. If it pulls back, mostly it's going to pull back to 284. I don't think it goes below that, but that is the area you can think of entering, and then these could be your targets. That is UROY. And last but not least, let's go check UUU. Now, UUU chart, let's go jump in and check the UUU numbers. So if you look at this, again, this is got a bit of a mixed results compared to others, but in the last few days, it's been rallying as well. It's got EPS negative. Revenues are a bit low side to my taste, but it's $1 billion company. Basic EPS still negative. And what it does is it does energy fuels, mining development company, which engages exploration evaluation of uranium, vanadium. So it's interesting. But what is good here is its net income jumped. That's interesting in 2023. That's very good. But if you look at the free cash flow is negative, but it's got cash equivalent that can pay off its debts easily. So overall, that looks very good to me. It's got potential to pay off its debts, not debt-ridden company. And on the financials side, let's look at earnings. Earnings barely positive. Maybe it's expected to turn positive later according to this, in 2025. Revenues are increasing on uranium and rare earth, vanadium. So it's got quite a few. It's a mixture of things, not pure energy. Pure uranium play. It's got a few things mixed as well. Now let's go and check this on the charts. Now, if you look at the UUU has got target heading to 9.42. And this is a future target. It's not etched in stone, but based on the patterns, it looks like this has potential to go higher. Okay. Now, if that's the case, let's go and check the seasonality for UUU. As I said to you, apart from UUU, others seems to be going up in November. But if you look at UUU, I don't think it follows that track, as I told you. See, it goes down. in November. That is interesting. Doesn't mean it'll do this year, but it just looks that way. OKLO is okay in November. And if you look at URA, that is up in November. CCJ, that is also up in November. UEC, it's also up in November. So that is a good summary of everything neatly broken down for you. And I've given you as much information as possible for you to be able to make good decisions, because all the AI companies need more green energy, and uranium nuclear energy seems to be the best option. That means all these stocks have got good future potential. Put that in your watch list, just like I showed you earlier. And don't forget to subscribe to this channel, share this information with your friends, and do not forget to leave a positive comment, like, and again, if you could share with your friends and family members and ask them to subscribe to this channel, I'll be greatly obliged. That will motivate me to give you more videos, more educational videos on trading, investing, as well as analysis videos. Hopefully you enjoyed this session. It's quite deep. We went in a lot more detail. And don't forget to subscribe. This is Shankar Sharma signing off. I'll see you in the next video. Bye for now.